Hey everyone, I'm Charting Man Dan, technical analyst and educator for the Chart Guys, and we're going to look at the markets today and go over a big win for the bulls. I'll point out what was missing for the bulls, and we'll look at what would be some red flags from here. Regional banks playing a little bit of a short squeeze game. We'll see if it gets legs.
Trading sideways for 7 days with 2 daily inside bars in a row. We started this morning tight yet again, but as soon as XLF, the financial sector, and QQQ both broke their high of yesterday together, that was the bull signal for me, just because we've been seeing the tug of war between these two major sectors that have been keeping SPYs sideways. And so that when they both go in one direction, that for me was telling. And we saw some really nice follow through. Uptick in bull volume. It was, Biden came out and said, I think we're going to reach a deal. And we spiked up and then gave it back. And then bulls took over. And so from here, all we're looking at now on SPY is 417.62 in the short term to see if the bulls are able to get back. Well, I take that back. 417.62, it's actually adjust for the dividends. So 417.62 is the key level. And if we were to get over that, adjusted for the dividends, that would be giving us the highest level in 8+ months. And so now we have a new benchmark level. I'm going to say that the SPY bulls keep complete control as long as 408.87 is support. So the only thing missing today was the healthcare sector joining Team Bull. The healthcare sector started very weak, as it has been. We bounced back to flat at the end of the day, but it wasn't participating on the bull side. We know the strongest days are when QQQ, XLF, XLV are all going in the same direction together. So they were going in the same direction, but XLV bulls definitely have some catching up to do. What would be a red flag from here? If we were tomorrow to give back over half of this move on the S&P 500, that would be a red flag, because we need to see follow through from here. We need to see, one green day is nice, but we need to see bulls put together something like this, where we get multiple days in a row and a break of 417.62. If you do not break 417.62, you give the bears something to cling to. Well, we still haven't broken the high of this month, and we still have this resistance level overhead. And so if we were to pull back 50% plus with the resistance overhead, you can make a bear case. But if you break over that level and you then have an uptrend on a whole bunch of time frames with a lack of resistance immediately nearby, then it becomes a whole lot harder to have a bear case unless you're just focused on fundamentals and very frustrated by focusing on fundamentals. QQQ didn't need to do anything for the bulls, but they just kept doing what they've been doing, which is heading higher, increasing bull volume, and just a ramp up the last few days. There has not been any red flag in QQQ for the bulls in 2 weeks of trading. The only red flags would be, again, fundamentals or people saying we're overextended or the valuations don't make sense. From a technical price trend standpoint, no red flags whatsoever. And so now we're looking at 334.42 as a key level. And again, if we adjust for dividends, that's down to 332.51. If we break 332.51, the NASDAQ is at 52-week highs. It will be the highest level since April of 2022. And for me, the benchmark is 322.94. If we're holding that level, the bulls have absolute complete control. Or you can use daily EMA 12, which will be a more reactive level. Same thing on the hourly. Bulls don't want to give back more than half of this move, but it would be less concerning for the NASDAQ bulls because they've been so strong. They have such a strong daily uptrend, whereas the S&P 500 is trying to break out of a range. So the S&P 500 has more proving to do than the NASDAQ does. Semiconductors kept their strength going. We had the upper wick yesterday, but following through today, never losing the hourly uptrend. And it's been AMD playing the laggard move with the bull flag confirming. AMD getting to the highest level in 8 months or so. NVDA just baffling bears. Again, it's just the number one thing I see on social media, which is obviously very market heavy with how I've curated my Twitter, is just there's so many people that are frustrated and just joking at this point about how strong NVDA is. Valuations don't make any sense. I'm sticking with my shorts because XYZ, and is just it just continues to pound higher. And so now we're over 300. The next resistance level is 307.11 and 313.30. Again, those dividends change things. 306.77. And again, daily uptrend. We've just been, ever since we double bottomed here, the bull said, nah, we're not done. And it's just been a daily uptrend since that point. Every bull break has generally lacked follow through. And in the video yesterday, I talked about how when we see this high volume, we watch for consolidation. And today is a break of that pattern. Again, every other spike above the 20-day moving average of volume has led to consolidation. The last at least 3 times that's happened, but not today. And I did attempt to short NVDA this morning, and fortunately recognized very quickly that was the wrong decision. So what I did was I saw this initial morning move up, and actually no, I think I shorted quickly enough right at the open and stopped out when this tightening range broke bull. But I could see that the bulls had a bullish correlation, and I knew that if we were going to set an hourly lower high compared to the high of yesterday and give me the hourly downtrend confirming that I wanted as a short, that we would need to see relative weakness. So I took a quarter day loser with my first trade on the day trying to short NVDA, and the best thing that I did from there, didn't try to short it again at any point during the day. And you know, you could look at it and say, I could have gone long and I left money on the table by not longing, but you know, I was making other trades during the day and making sure my IRA was 100% long only once I got the signal from the SPY and QQQ bulls, or QQQ and XLF bulls. And so I consider that a win. Not fighting the momentum when I clearly saw that I was looking in the wrong direction initially. So we're up after hours. Let's see if we can gap up open tomorrow. This is the kind of move that, for me, in my opinion, needs to be a climax kind of top where you just shoot up. There is nobody left to stop out. There is nobody left to long. And you see a very high volume top, but earnings are approaching as well. So we'll see if that plays a factor. But SMH real strong. Healthcare, again, not participating. Breaking to the lowest level in over a month. Big volume and a big bounce must confirm an hourly uptrend, and a lot of work to do. You know, the weekly consolidation overall is still no major red flags. If we look at the retracement size, it's 50%. But we've got to see the bulls start joining in. We've closed lower than we've opened 8 days in a row. So again, we've seen intra-sector rotation in tech as Apple trades sideways for 7 days while Google and Amazon explode up. That's intra-sector rotation. Now we're watching for inter-sector rotation. You know, if QQQ needs a breather and if QQQ pulls back to daily EMA 12, do we see healthcare get a couple days of bounce to offset that? That's the next thing that I'm going to be watching for. And again, as I keep mentioning, if the broader market bulls are going to keep control from here, keeping in mind, big picture, I'm looking for the potential of a 4-month lower high in the NASDAQ, considering resistance is still over 20% away, the all-time high. So again, I'm open to a 4-month lower high forming here, but that can take a while. So if the bulls keep grinding higher for the summer, watch the growth names to be laggard bulls. And that would be names like PLTR, the names that have been all bear from the blow-off tops, the names that gave back 80% plus, and then traded sideways over the last 4 months while the market bounced higher. PLTR, bull break of the weekly tightening range was 904. Now we're testing 1031 to try and follow through. Looks a lot like AMD with that quick higher low and continuation. So DD, actually no, let's go with ARKK. ARKK, can we confirm the daily uptrend? Then we would zoom out and watch this weekly equilibrium. Can this weekly equilibrium break bull for months of a sideways range to then shift this momentum and see a bull cross of weekly EMA 12 and 26? If this pattern breaks bull, that will happen, and it would be the first time that that has happened since the all-time highs. So a big question that people are asking is, you know, where's the strength going to come from here? It's been big tech holding everything up. And, the market's very thin up here. There's no breadth. There's no market breadth. And so where does that come from? Well, if the financial sector, if IWM, if our growth names play laggard bull, that's where it comes from. And so that's the big question. And essentially we started Monday seeing, all right, it's shaping up. And then yesterday it was a head fake. No follow through. And now there is follow through. So the big red flags from here would be, and again, burden of proof is on bears, it would be a 50% plus retracement on the hourly time frame for SPY from giving back half of today's move. It would be XLF failing 3262. We'll talk about Tesla in just a moment. Talk about Tesla a bit later. So XLF has broken a triple top. We had a little triple top, 32.24, 32.22, 32.19. Each day, bears get rewarded for playing off resistance. And then today, look at the close, weak close. This to me, I just imagine if I'm in a short, today catches me completely off guard. A third rejection or a second rejection from resistance in a row and a close at the low of the day. And then we open right at the high of yesterday and take out multiple resistance levels. That is putting pressure on bears. I don't need to look at, a lot of people look at short interest, nothing wrong with that, but I don't need to look at short interest on the financial sector. I know there's a lot of shorts based on the chart because I'm a trader, and if I'm a trader looking at these charts, they're weak, specifically the regional banks. We obviously know there's a lot of shorts in the regional banks. But if XLF can break 32.62, it's a weekly inside bar bull break, and it will be the weekly higher low being set. And the question from there is, can the bulls confirm a weekly uptrend holding our fear lows for a monthly higher low? So we had the fear low, solid bounce, and now we're trying to form a monthly higher low. And we've got to confirm the weekly uptrend for that to be the case. So 32.62 is a key level. It would be a red flag for me if we fail to break that level this week. So 32.62 on watch. KRE, Adam and Eve reversal pattern playing out. We are now at a level by breaking 39.39 that is putting anybody that has shorted in the last 2 weeks underwater in the regional banks. This is short pressure. This is the most bullish day that we've seen in almost a month, if not more than a month. The volume is over the average. It's a green Marubozu candle. The bulls are going to do everything they can to try and gap up tomorrow to continue to put pressure on these shorts. There was a little bit of help from news. We had Western Alliance Bank, something like that, saying that they had $2 billion increase in deposits, which is certainly a shift from the news that we've been used to. I've talked a lot about the psychological setup here for the oversold bounce to take place. And a lot of that had to do, honestly, social media, there's information to be gained from social media. And so I did this poll May 7th, and this made me more bullish regional banks because 79% said they are expecting another bank failure in May. And that told me if we do not get that headline, we're going up. And so we haven't gotten that headline in the 10 days since then. Again, it can happen. I'm not saying it's game over. It can still happen in May. But every day that it does not happen is a win for the bulls. And you look at this and say, well, 534 people. The main takeaway that I took from statistics class in college, the course I took of statistics, was you only need a really small sample size to give you accurate information of a general population. And for a population size of over 10,000, you only need 10%. So if we were talking, if your population size is under, I forget what the limits are. If it's under a certain amount, you want 30% or so of the population size to be accurate. But when you get to a big population, you don't need much at all. But anyways, 500 people is certainly enough for me to have this as valid information. And so this showed me a lot of people were overly bearish the banks if we got no new collapses. And we haven't gotten any new collapses since then. And so this was another part of the reason why KRE, a week from this past Sunday, was my swing report pick for this bounce on the 7th. And again, we got a link in the comments of this video. We're running a free trial on the swing report. but it's going well for this bounce. Weekly inside bar bull break. So XLF is hoping to follow, and a bigger picture target. At this point, with the trade setup that I gave, a hypothetical trade, a bull could sell half their position and put a stop under 34.50 and be risk-free. And if that's the fear bottom for the summer, then you have nothing to worry about. You just hold that position and hope we go up for months. A target in the short term is going to be weekly EMA 12 resistance for this weekly oversold bounce. And we'll see if we get there. A big red flag for KRE. I guess if we were to give back half of this move from 35.76 to wherever we top out, that would be a red flag. But at this point, we're just looking at a standard uptrend. How long can the bulls keep a daily uptrend going at this point? Next major resistance level, 43.02, 44.59. And we got a lot of space to look for an hourly higher low to form next consolidation. Let's see if the headlines shift. Oftentimes you'll see headlines lag the price. Plenty of times the headlines will lead the price, but there are definitely times where the sentiment shifts a bit and then the headlines start reflecting that sentiment shift. IWM, at the highest level we've seen in a couple of weeks. Bulls really want to break 177.34. Same setup as the financial sector, not surprising because the financial sector is the largest holdings in IWM. But weekly inside bar bull break, weekly higher low set. Can the bulls break 179.78 to confirm a weekly uptrend and to confirm a monthly higher low? Well, I don't love the monthly setup for clarity. We'll stick with the weekly. But IWM has done nothing but go sideways for 2.5 months while the broader market has gone up for 2.5 months. So do we see it act as laggards and help the broader market keep strong? That remains to be seen. We've been struggling at weekly EMA 12. It's not game over, bulls win, obviously. If we reject from weekly EMA 12 yet again on IWM and XLF, then bulls don't prove anything bigger picture. So still a lot of work to be done on these weaker sectors, but it's a good start. Biotech sector, clinging to daily EMA 12. We had a lot of weakness to start the morning, but a very big bounce and a lot of space for an hourly higher low to be the result of next consolidation, knowing we have to confirm the hourly uptrend from here. Tesla. So bullish reaction to the shareholder meeting and Elon Musk CNBC interview yesterday. And the bulls are attempting to shape up this monthly higher low here. As I've been saying, for me, the monthly higher low is the most likely scenario due to the 100% plus bounce. And so a monthly inside bar is becoming more likely now. And I can say that because how many trading days do we have left in the month? 10 trading days left. We're close to the middle of last month's range. But this is an attempt at a quick little weekly higher low and higher high. If we get over 177.38, which is coming into play, you can call that a little quick weekly uptrend trying to shape up this monthly higher low. And so at that point, a bull will be using 152 as a stop because 101 is way too far away. And then the mindset would be, that's either the monthly higher low or I'm wrong and want to stop out. And then the bulls have to confirm the monthly uptrend to get the 4-month bounce underway. And then we scout the 4-month lower high. So AI is getting nice follow through. And AI was another one I was keeping an eye out. Do we fail to break the high of yesterday? Very quickly, the answer was no. And so this is the kind of environment when you have this kind of market confidence where a name like AI can thrive. And now 3 days in a row of very high volume, huge weekly bounce, tons of space for a weekly higher low next consolidation. But this is my AI list. And we look at these names, again, a lot of them are growth names where they're trying to build this longer term base. We already looked at PLTR. Look at DDOG. Tightening range, breaking bull. We're up 50% in 3 weeks. And it's trying to put in a long-term bottom to get a 4-month bounce underway. And technically now, the 4-month bounce is underway. So I would be watching any name that has pulled back for over a year with the 4-month lower high every single candle and watching for those names to try and get 4-month bounces going. NVDA got its 4-month bounce going long ago. The S&P 500, the NASDAQ, long ago. Is it going to be the laggards now? NIO. Is NIO going to get a turn? It certainly is not doing anything to show us that it's shaping up, but this is the kind of chart I'm looking at. I want to see a name that looks like this try and shape up a 4-month bounce. So keep an eye on growth names that have not done so. Path, another one, is tightening up sideways. Can we break 1834? I don't like that Path is coming off the all-time low. I'd rather have a name that's looking at a longer-term higher low. The dollar still strong, and that is one positive for the broader market bulls. The fact that the NASDAQ can hit almost 52-week highs, and the S&P 500 can almost hit the highest levels in 8 months, while the dollar is at the highest level in multiple weeks. Or a month, highest level in a month. So now we have a daily uptrend guide for the dollar. And we can say the dollar bulls keep full control of the bounce as long as 102.20 holds as support. But we are going to scout a weekly lower high, anything under 105.88. The weekly bear flag is becoming less likely, but still going to scout a weekly lower high. Metals still on the weaker side. Again, the metals liked regional bank fear. They like market fear. And that is diminishing a good bit over the last week. And so we are weakening in the metals over the last week. 1969 coming into play for gold. Silver, going to be watching for a daily bounce soon, but tons of space for a daily lower high to be the result of that bounce. Oil daily higher low is set. Bulls have to break 73.89 to confirm a daily uptrend. Oil, I haven't taken an oil trade in forever, but it's giving us the most likely scenario. We knew to be scouting a daily lower high, and we were watching EMA 12. We knew it was a big enough bounce to scout a daily higher low. And so it's all about zooming into the shorter term time frames to help pinpoint the longer term most likely scenarios. But once you look at 10,000 charts and are comfortable determining longer term most likely scenarios, it makes trading a lot easier just in the sense of, things make sense a lot more in how these different time frames overlap. And Jungle Funk Joey did that webinar going in depth into how these different time frames and trends relate to each other. And he's going to do another one next week, pretty much a part 2 with additional more in-depth information. But that first one was really well received, so I'll let you know all about that second one coming next week. But they're on our YouTube channel. Natural gas, 4-hour downtrend did confirm, but no follow-through. Bulls would love to keep holding EMA 12 on the 4-hour from here. Daily, essentially failing weekly resistance if we look at the natural gas futures, and now trying to form a quick daily higher low. But if we have a red day tomorrow, need to be a bit cautious just because we are still in a weekly downtrend and we are still rejecting from weekly EMA 12. But certainly we can say this is the most convincing bounce attempt that natural gas bulls have put together in recent memory. So great win for the bulls overall, but it's not over. 32.62 on XLF. Healthcare sector joining in. Follow through tomorrow. If you have a solid red day tomorrow, it's darn, here we go again, back into sideways chop in the S&P 500. But as a trader, just give me trends. Just give me directional trends. I don't care if it's up or down. I just want to see multiple of our major sectors going in the same direction together. And today it's the first time we've seen it in a while, and it had really nice follow through. Appreciate you watching. We got a long video today. And don't forget to do good things.
Hey traders, I'm Charting Man Dan, technical analyst and trader. Look at me go. Look at me go. You famous.